สวัสดีครับขอต้อนรับสู่รายการ XAM Wealth Special นะครับวันนี้เราได้รับเกียรติจากแขกรับเชิญพิเศษจาก Macquarie Asset Management คุณปีเตอร์นะครับซึ่งเป็น Portfolio Manager ของกองทุน Infrastructure Fund วันนี้จะมาพูดกับเราให้ความรู้เกี่ยวกับการลงทุนใน Infrastructure ที่กำลังเป็นที่นิยมนะครับในทั่วโลก Hi Peter Hey very nice to have you here
Yeah, good to see you and thanks for having me on.
Yeah, so let's tell us a little bit more about Macquarie Asset Management.
So Macquarie is a global financial institution that was established in 1969 and since then it has grown to have offices in 34 markets and an employee base of over 20,000. So a significant amount of growth during its life. Macquarie provides a wide range of services, including asset management, retail and business banking, wealth management, asset financing, commodity trading, renewables development, specialty advisory services, as well as principal investment. Within Macquarie, the asset management group is Macquarie Asset Management. Macquarie Asset Management is trusted by a range of institutions, pension funds, governments and individuals to manage approximately $580 billion of the services that MAM provides covers a range of items including infrastructure, green investments and renewables, private credit, real estate, agriculture and natural resources, as well as equities and multi-asset. Importantly for today's chat, we'll be focusing on infrastructure. And for infrastructure, MAM has actually been named the number one asset manager globally based on its EWA. That's based on approximately $180 billion of assets that Macquarie manages within infrastructure. And that capital is deployed across about 170 globally. Importantly, those 170 assets we own provide essential services to approximately 280 million customers every single day. So as you can tell, this large infrastructure platform providing a significant impact to the broader communities in which you invest.
Very nice. So you mentioned that Macquarie Asset Management is the world #1 infrastructure manager. Infrastructure is relatively new asset class. Can you tell us more how Macquarie Asset Management define infrastructure?
Sure. There's a number of key characteristics that we look for in the infrastructure we invest. Firstly, what we're looking for is assets that present essential services to its communities. So this is things as basic as providing electricity, providing water, providing the infrastructure necessarily for you to speak on your cell phone. These types of services obviously fundamental to the societies in which we are investing and supporting the long-term growth of those economies. And importantly, these types of services have a relatively inelastic demand. So you have a good stability in terms of the volumes you're seeing. I think the second key thing that we look for in terms of infrastructure characteristics is high barriers to entry. And high barriers to entry can come in a number of forms. Firstly, we look at high barriers to entry in terms of the size of the asset base. So we're talking about infrastructure assets that are very large. So if you take a toll road, for example, the ability to replicate that is very expensive. Or barriers to entry potentially come in the form of regulated or long-term contracts, where you effectively have limited competition associated with the service you're providing. Now, these characteristics together allow you to have an asset that provides relatively stable and predictable cash flows over the life of the asset, and in particular allows for direct or indirect protection from inflation, and certainly in recent macro environment, protections against high inflation are obviously a key factor coming out.
So when our clients should look for when making investment into infrastructure?
So the key thing that we have found that is valuable when assessing and looking at infrastructure opportunities, this can predominantly be focused in terms of your team, and in particular, how close it is to the local stakeholders and the assets. So having a global team that is able to be on the ground, have sector expertise, both from a financial perspective, but also from an operational perspective, allows us to develop those relationships with stakeholders, including governments, regulators, various management teams, and the various customers and broader community. And these relationships are essential for our ability to be able to assess and screen quality opportunities. I think secondly, we need an ability to properly execute on a robust due diligence work. So that means not only using those professionals you have around the world to work and assess on opportunities, but supplementing that with third-party external advisors who can provide specific advice, whether that's in relation to accounting, legal, safety, diversity, equity, inclusion, all the various factors that you need to look at in terms of successfully running a business. We can pull those together. And with Macquarie's track record, we've found having the relationships with the right advisor and the right skill set to be able to help us work through these opportunities. Thirdly, what we found is very important when investing in infrastructure is having a clear transition plan. You're stepping into a very large asset. As I mentioned, there's incredibly important stakeholders you need to manage these assets. But you also need to make sure that the company itself is operating effectively, has the right team, the right management team to be able to deliver day-to-day operations, as well as to deliver your business plan over the next 5, 10, 20 years. So what we have found quite useful is putting in place, for example, a 100-day transition plan where you'll lay out all the key objectives you need to deliver to make sure that asset is primed and ready for successful delivery of your business plan in the longer term. And that then takes you to the next step, which is managing the asset. And for us, having that deep expertise on the ground alongside the assets is critical to that. That allows you to understand the landscape, see the potential risks that are in front of you, all the opportunities, and be able to execute on those. Also, having a mixture of professionals, both financial and operational, allow you to speak the language of the management teams, allow you to optimize their performance and deliver the best. So having that robust asset management framework is really important. And you should also remember that that's not just about how do we drive business performance, but also how do we manage. And managing a risk management, having a risk management framework to ensure that we're assessing all the various components of the business, whether that's stakeholder management, operating performance, external factors. All these things need to be considered to make sure your business at any point in time is positioned for the outcome. And then finally, we want to focus on potential realisation. So even though infrastructure is an asset that is typically held for a very long time, when we underwrite an opportunity or when you're assessing holding an asset for a long period of time, you want to be thinking about how do I maximise who is a potential buyer for these assets and how do I position the asset for them over the longer term. So realising or having successful skill sets in realising assets is a fundamental point to delivering this.
Very nice. So you already mentioned what investors should look for when they invest into infrastructure. So what about the key benefit of adding infrastructure into our client's portfolio?
So we've seen institutional capital investing into infrastructure for a very, very long time, for decades. And we think there's a number of key characteristics that have appealed to those investors, but I think that are relevant to your clients as well. I think firstly, as I mentioned before, these assets are very large, they have those essential service characteristics of barriers to entry, and that provision of stable, predictable cash flow, I think is a profile that really appeals to investors. For a lot of institutional capital, they're thinking about how do I best manage my liabilities, for example, pension obligations. With assets, I think infrastructure with their long-term profile provides that match of assets and liability. And I don't think that's necessarily different for your clients who are thinking about their long-term objectives. What are they trying to achieve in terms of wealth creation, in terms of their retirement or otherwise? So I think that long-term stability of cash flows equally. I think secondly, from a diversification perspective, investors have found infrastructure to be quite. It doesn't necessarily perform in the same manner as other asset classes like equity or fixed income, and therefore the addition of infrastructure to a portfolio may have the ability to reduce volatility while also maintaining or potentially return. So we think the ability to diversify the portfolio away from that 60-40 equities and fixed income is an appealing. And I think finally, the other reason why capital finds infrastructure appealing is, as I've mentioned before, the inflation protection that comes along with infrastructure. Generally, you're going to have some level of direct or indirect inflation protections, and certainly in volatile macroeconomic environments, as we've been experiencing over the last 12 months or so globally. So we've also found that investors have been attracted to the various types of infrastructure. So within infrastructure, you can have lower risk opportunities, which we would call core infrastructure. Those assets are typically more regulated, have a longer term contracted profile that provides good predictability in terms of. But you can also move up the risk curve and pursue higher risk infrastructure that perhaps has more growth opportunity, may have lower barriers to entry, but that obviously allows you to generate higher return. And that may fall into a core plus or value add type option. And I think as investors look across the infrastructure spectrum, they see the opportunity to potentially find alternate allocations to their fixed income and equity portfolios by bringing on those types of core plus opportunities within their portfolio.
So we have already talked about the good side of the infrastructure investment. What about the risk associated with infrastructure investment, and how would Macquarie mitigate these risks?
Look, I think infrastructure, similar to a lot of asset classes, is exposed to certain macro risks. They're exposed to the financial markets, and therefore you're going to see some similarities to other asset classes in terms of some of those. But I think the key things that we like to focus on when we think about investments in infrastructure, what can really kind of drive the needle and have a large impact on your business, is probably a couple of areas. Firstly, going back to the commentary about stable So for us, when we look at infrastructure opportunities, we want to make sure we're finding the right partnerships with those various. An electric utility in of itself feels like a good investment. You can sell electricity, you can generate your returns. But what's the long-term objectives of the regulator? What's the long-term objectives of policymakers? And how are we partnering with them to make sure what we're doing with this company is going to deliver on those objectives? Because at the end of the day, a lot of these assets are heavily regulated. And that's not just in terms of how much you can charge for a certain service, but also in terms of how you're responsible on it. How are you dealing with state? Are your employees going home? How are you dealing with your employees, and are they being fairly? Are they having? Do you have the right diversity, equity, inclusion type policies included within your? So I think managing stakeholders and finding a way to partner with these stakeholders over a long period of time is. I think secondly, we want to think about stranded assets. And what that means is that these are very large infrastructure assets. You're investing a large capital into these opportunities. And you want to make sure that over the very long term, those customers are going to continue to demand and use that infrastructure. If you find yourself in a scenario where you have declining customer demand, you have a large asset that you need to generate a return on, and it's very hard to pivot the business. For us, as you think about hydrocarbon heavy businesses or businesses that support hydrocarbons, we certainly need to reflect on what do these assets mean, how relevant do they in the next 10, 20 years. So certainly a big focus on stranded assets. And these types of focuses, we think we can work through or assess before we select and deploy capital by a number of factors. I think firstly, we need those highly experienced local teams. They're going to be on the ground, understand the objectives of the stakeholders. They're going to understand the political regulatory dynamics around their assets, opportunities and risks around pressure and being able to continue to charge that service. We also need to make sure that we develop the right risk management frameworks around those assets to ensure that we've got the right steps and planned out to the extent I think.
Now we understand the key characteristic of the infrastructure. However, there are a lot of uncertainties given the current market environment. Would infrastructure investment be backed or structural growth in demand regardless of these market noises? What Macquarie's view?
Yeah, I think there's a couple of key characteristics. I think firstly, you need to assess the existing infrastructure globally. I think as you may have seen, infrastructure isn't necessarily a key topic, key area where people want to continue to invest money in. It's behind the scenes. I think what you've seen as a result is a deterioration of the quality of infrastructure globally. And that's really meant that aging infrastructure requires material additional investment over time. And some projections put the number at close to $94 trillion required to be invested in the existing infrastructure base by 2040 to really keep up with development. So a huge amount of investment required in the existing assets. In addition to that, you have key thematics for new infrastructure requirements for development. And that really flows from three key thematics. One is a decarbonisation thematic I mentioned earlier. So for decarbonisation, what we're seeing is an unprecedented investment of replacing the existing generation base with renewable assets. And those estimates are, some of upwards of $100 trillion plus by 2050 to be able to achieve kind of the net zero by 2050 goals set by. So that's a significant amount of additional capital required to be deployed into. Secondly, you have digitalisation. So over the last couple of decades, we've certainly seen the importance of communications, having access to your cell phone, having strong broadband through your laptop, and being able to communicate regularly is becoming more and more an essential service. So very similar to your requirements for electricity, people require consistent and open access to digital infrastructure and therefore you see a significant investment opportunity in terms of continuing to enhance those services to be able to meet that. And I think thirdly, you see broader demographic trends. And that's not only population growth in terms of the number of people using infrastructure, but also as you have increasing wealth around the world, there's increasing amounts of demand for infrastructure. People expect the level of service. I think between those three factors, I think we're going to see continued demand for infrastructure growth through the cycle.
Yeah. What about the Macquarie approaches investing in infrastructure and select assets to provide return for investors? How Macquarie Asset Management approach that?
Look, for us, a lot of the capital that we manage, this comes from pension funds from around the world and other similar institutions. And those sources of capital, they really represent people from our communities. So they're nurses, they're policemen, they're teachers. And the capital they're giving us is their savings that they hope to grow over a long period of time. And having that level of responsibility for that capital is something that we're very, very focused on and ensuring that we can deliver on the outcomes that those deserve. And therefore, when we're looking to deploy capital, we need to have very strong conviction in what we're assessing to make sure it's appropriate for those. So for our screening process, again, from a frontline perspective, investment teams around the world, they're out there trying to find opportunities, those relationships they have, their knowledge of the local market allows them to find interesting and differentiated where we can find, hopefully, assets that are mispriced or able to generate an expected return. So that team's kind of bringing together lots of really interesting investment opportunity. We then want to be able to leverage those ideas and overlay a certain amount of appropriate due diligence and screening. And that includes not only from our committee members with their long records of investing in infrastructure, their knowledge both from a financial and operational perspective about these, but we also make sure that there are processes and procedures we put in place to make sure that every asset goes through the same robust due diligence process where we're making sure we're covering off all aspects of the asset.
In summary, can we say that Macquarie views that these are exciting times ahead to invest into infrastructure?
Look, I think certainly from our perspective in today's market, I think similar for a lot of asset classes, obviously the current macroeconomic and even geopolitical volatility we're seeing is a reason to be focused and making sure that your portfolio is well positioned from a diversification perspective. And because of those characteristics of infrastructure, those essential services, high barrier to entry, predictability of cash flows with a direct or indirect links to inflation, we think those types of assets are well positioned for that volatility, and we believe will continue to attract investors. So we are hopeful that going forward, the interest in people looking to diversify their portfolios to get the benefits of infrastructure, we hope will continue to grow, And for us, in terms of the investment opportunity, as we noted before, notwithstanding the macroeconomic environment, we do see these assets performing through the cycle, and therefore we are anticipating to continue to see attractive opportunities going forward. So certainly from where I'm sitting at the moment, and having the benefit of all those professionals around the world trying to feed up good ideas, at this stage there's no shortage of things for us to do.
Okay, I think we have already understood a lot more about infrastructure and about Macquarie Asset Management. I think there will be a good opportunity for Thai investor to look into this asset and probably invest into it in the future. So thank you so much, Peter, for being here today with us. I know it's late in New York, so yeah, thank you very much again.